India is making a choice that could echo across continents. In recent days, the Indian leadership reportedly pledged to halt new purchases of Russian crude oil, a seismic shift given Moscow's reliance on energy exports to fund its war machine. Some world capitals see this as a quiet blow to Russia. Others warn it could invite retaliation in commodities and strategic partnerships. But one thing is clear: this is not a random diplomatic gesture. It's a strategic pivot with consequences on the battlefield, in the markets, and in global alliances. To understand what's at stake, we must follow the thread from New Delhi to Moscow, from oil tankers to missile factories, from boardrooms to border posts. This is a story of energy leverage turned into wartime pressure, and it may mark one of the most consequential moves of 2025. First, the fundamentals. Russia's war machine depends heavily on export revenue, notably from oil and gas sales. As sanctions mounted, Moscow diversified its markets eastward, leaning heavily on India, China, and Middle Eastern partners to absorb its surplus crude. Indian refineries, with their scale and capacity, became viable and significant customers. Through 2023 and 2024, India increased its Russian oil intake under long-term favorable deals, some at deep discount, sometimes routed via intermediaries, sometimes disguised by shipping jaunts through third-party ports. But today, that arrangement is unraveling. India's pledge, while still being formalized in policy, signals a political and economic awakening that the costs of ties with Russia, in reputational and diplomatic pressure, may now outweigh favorable oil deals. For Moscow, that is a direct threat to its budget for defense, armaments, and hybrid operations. Now, let's examine the military implications. With diminished energy income, Russia's ability to sustain prolonged conflict, importing weapons parts, maintaining logistics, fueling armored columns, and resupplying missile factories, faces strain. Fewer hard currency resources could force cuts in procurement, maintenance, or foreign procurement of advanced components. In effect, India's decision is a form of economic targeting, not with bombs, but with budgets. Moreover, energy dependence influences supply chain resilience. Composite materials, electronics, precision machinery, many critical inputs for defense industries rely on global trade networks. A tightening of revenue puts pressure on those supply lines. Already, several defense firms in Russia are reported to delay orders, restructure contracts, or ration fuel for non-essential operations. Beyond the battlefield, this move reshapes geopolitical alignments China watches closely. If India reduces its dependence on Russia, China may see an opening to negotiate energy deals or assert leadership in supplying Moscow's role. The Middle East will feel the tremors. Nations like Saudi Arabia, UAE, Iran may recalibrate their export strategy, leveraging new demand. Europe and the US will view India as a geopolitical partner, making bold decisions, reinforcing pressure on Russia. But such a pivot is not without risks. Energy markets are interlinked and volatile. If India reduces Russian crude imports aggressively, oil prices might spike, affecting consumers globally and inflation pressures in its own economy. Replacing Russian supplies requires new sources, possibly at higher cost or with logistical constraints. Domestic industries, especially those reliant on low-cost feedstocks, may protest. And Moscow may retaliate through economic, diplomatic, or hybrid means, such as disrupting supply chains, orchestrating cyber attacks, or leveraging proxy networks in South Asia. We must also look at the political narrative. The Indian leadership makes this move under immense pressure. Internal critics, energy demands, public opinion, diplomatic balancing between Russia, the US, and China. The messaging will matter. How India presents this shift, as principled stance, as cost of war solidarity, or as strategic realignment, will influence whether the pivot endures or reverses. Next, the global economic ripple effects. Russian oil will need new buyers or steeper discounts. Some markets may see oversupply, tanker traffic rerouted, shipping routes changed, ports realigned. Crude prices could wobble. For Russia, the loss of a major buyer reduces its negotiating strength. For India, replacing that oil means seeking Gulf, African, or Western suppliers, which may raise freight costs, complicate pipelines or shipping, or require long-term contracts at less favorable margins. Furthermore, for indirect investment, currency flows, and trade partnerships could shift. Countries that saw India as balancing between East and West may see its tilt more decisively. Investment in energy infrastructure will be scrutinized: pipelines, storage, refining capacity. Now let's map possible future scenarios and risks. Scenario A: controlled pivot. India gradually phases out Russian oil while securing new alternative suppliers. The shift is managed, inflation remains tolerable, and diplomatic momentum bolsters India's standing in global forums. Scenario B: economic turbulence, energy prices spike, industrial sectors protest, inflation surges, and public discontent grows. India is pressured to slow or reverse the pivot, especially if hybrid retaliation begins, for example, supply chain hacks, trade pressure. Scenario C: Russian countermeasures escalate. Moscow responds with commodity export bans, sanctions, or pressure on partner nations to isolate India. In extreme cases, we might see hybrid tactics targeting India's energy infrastructure or leveraging proxy conflict zones in South Asia. A full-scale energy Cold War might begin. The success of this pivot depends on coalition support. The US, EU, Japan. Any sign of coordinated political, financial, and technical backing for India's shift would amplify the pressure on Russia. Shared energy investments, joint buying, and strategic reserves could stabilize the shock. In closing, India's move away from Russian oil is not a minor footnote. It is a gambit in the larger strategic chessboard of 2025. It weaponizes supply chains, redefines energy dependencies, and challenges war economics without firing a single shot. If this decision holds, and alternative supply lines remain stable, it could tighten the noose on Russia as war economy. If it fails, the backlash could ripple through markets, alliances, and global balance. Either way, we are witnessing a moment where diplomacy and trade may determine the next phase of war. Stay alert. This pivot could unfold quietly over weeks or collapse under pressure. Watch India, Moscow, China, and the energy corridors. The future could be written in barrels, not bombs.